JSE closing firmer with the markets zoning in on the debt ceiling deal and interest rates in the United States, while the rand domestically also regaining some strength. It still hovers around the 20 rand mark. Should we add the word dangerously to that dollar mark? And let's get some perspective now, and we speak to Rand Merchant Bank's foreign exchange execution there, Matete Thulare. Mr. Thulare, good morning to you. Let's kick off this morning with the market's early activities. The JSE closing firmer yesterday.
Morning, Claudia. I suppose, look, the rand yesterday made an all-time high of 1992, but on the back of some sharp dollar weakness, that saw us trading back just below 1960. And obviously the short-term bias remains towards the downside. Obviously, you did see that filter through into the equity market, but also the risks are high given the non-farm unemployment and payrolls numbers that we have later this afternoon out in the US. Already yesterday we saw some weak US data for a change. The ISM and the revised labor costs were obviously weak, which obviously filtered through to that dollar weakness that we touched on earlier. And then there was talk about potentially the Fed being dovish as well. Now there's a probability that for a June hike, now the cards are saying probably 25% is on the cards. And obviously we've seen the negative reaction in terms of the dollar. So, all in all, we were 8 cents shy of an all-time high of 20 against the dollar. So it just shows you how volatile the markets can be at this point in time. And I think obviously with the culmination of a lot of risks in the market, anything is possible, especially as we head into the last 6 months of the year.
You've already touched on the currency. Let's perhaps focus a little bit on it. What factors are moving the rand right now?
At this point in time, Tolly, there's a lot that you can just think about, whether it's from a local perspective or a global perspective. Now, in about 2-3 years ago, 2/3 of the rand movement was driven by global factors. But at this point in time, it feels like we are being driven 50-50 by what's happening from a local perspective and also from a global perspective. From a global perspective, obviously, the key things there that we also keep looking at is the fact that whether China is obviously growing, obviously their lockdowns there have impacted growth. We are looking at the US in terms of the job numbers. We're looking at the inflation numbers. We're looking at the interest rate increases, what the different Fed committee members are saying to us. From a local perspective, we know obviously that there's issues with regards to the load shedding, the economic growth, the interest rates, what the MPC committee is saying, and obviously some of the structural reforms that we keep talking about. Don't forget, in the midst of all of this, there's still the geopolitical tension between Russia and Ukraine. And also added to the fore at this point in time, obviously, is the latest political saga between ourselves, the US and Russia, especially with the BRICS summit that is coming up in the next 2 months. So there is a lot that is being factored through into the rand, and this is why obviously you're seeing the weakness that we've seen over the past couple of weeks. Just in the month of May, we've lost about 8% against the dollar. We are the second weakest performing emerging market currency. On a year-to-date basis, we've lost about, call it 13% against the dollar.
13%, my goodness. Let's talk commodities. Oil prices this morning rising on the back of positive sentiment as it regards the U.S. debt ceiling deal. Markets also watching that upcoming OPEC meeting. What's expected there?
Obviously, the big one is this coming Sunday. If you think about oil, whether it's going to be the oil in the F1 Formula cars on Sunday or it's going to be the oil market, I think at this point in time, markets are thinking that the prices will continue to drop despite best efforts of producing countries to boost the prices. Now, prices have obviously slid since OPEC and its allies, obviously known as the OPEC Plus, have cut supplies in October last year by about 2 million barrels a day. In February this year, again, Russia said they will cut by another 500,000 barrels. And obviously there was another move in April to cut, oil barrels by another 1.2 million. And that has not stopped the slide of oil. I mean, this is where we're seeing oil prices trading close to $70 a barrel. Now, the cuts that we've seen, they have been countered by the fact that there's new petroleum producing countries. The prospects of an economic slowdown are obviously on the back of investors' minds. And also Russia's unexpectedly, robust oil exports to Western, to other countries such as China, despite the Western sanctions. That is something that is obviously playing into the market. Already we know that they're going to be meeting out in Vienna to discuss these supply levels. And what we're looking at is potentially, probably there won't be anything. Probably they'll leave the output unchanged. But remember that there's also been talk from the Saudi Arabia energy minister last week saying that the markets that are betting against higher prices should watch out. So this is obviously something that is going to be quite interesting come Sunday evening when we get, their consensus on what they have decided.
Well, it's a space we're going to have to watch. Let's talk company news. Nedbank issuing the group's trading update for the 4 months which ended in April 2023. So 2 questions there primarily, Mr. Thulare. One, the group's performance, but secondly, the succession plan. That's on the lips. What's going on there?
Yeah, look, I mean, their revenue growth for the first 4 months of this year is already ahead of the guidance for the full year that they had anticipated. Now, there is net interest income for the 4 months up until April the 30th is in the mid-teens on a year-on-year basis, which is ahead of market expectations. But then when you flip at it, from a leadership perspective, they have begun the search for a new CEO. Now, Mike Brown, who has been there for at the helm since 2010. And he's joined Nedbank about 30 years ago and has been an executive director at Nedbank since 2004. Now, the bank has said that they have hired a global firm with a strong domestic presence to help find a replacement for Mr. Mike Brown, who will remain in the post up until such a successor has been chosen. Now, don't forget that just a few months ago, they had also had a recent appointment with Daniel Manele, who was the former deputy governor at the Reserve Bank. He's now the chairman of Nedbank. So obviously it shows you that there is a change in the leadership dynamics there. It will be interesting to see who replaces Mike Brown in the next few months.
Well, we're going to have to watch that space as well. Let's conclude with Richmond releasing its annual report and indeed accounts for the year which ended in March 2023. Talk us through their performance.
Now, Richmond, remember, they're the owner of brands such as Cartier, Montblanc, Van Cleef and Apples. I mean, that is the luxury, sector. I mean, the demand for the luxury sector has remained resilient despite the tough economic conditions. And that's allowed them to book a record revenue and profits for the 2023 year. I mean, already we're seeing Swiss watch demand continue to growing in April despite the inflationary pressures that we keep talking about. And also for the first time since 2021, we've seen watches decrease in terms of exports there. But what has been quite a shining light is the fact that, countries such as China, France and Hong Kong, the shipments in terms of luxury goods, that has increased by close to 10%. And obviously even the likes of Japan, there's been strong demand for them. Already we've seen the sales attained in the final quarter of their financial year, getting bumper sales from the Asia-Pacific region, and that's resuming growth after the removal of obviously the travel and health restrictions in mainland China. And that's why we're saying that obviously the more China grows and the more demand that happens, I mean, the more it filters through for the likes of Richmond, who are actually, smiling all the way to the bank. And this is why you're even seeing them actually increasing even their dividends by about 11%. And also issuing a special dividend on the back of this. So I think for them, it's actually a great set of results.
Well, good times for Richmond. Let's leave it there. Thank you very much, Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank.